Hello and welcome back to the Expat Tax series, and today we are looking at part 5, the physical presence test. So like I said, we are dealing with non-residents, and the physical presence test is really the test to determine whether a non-resident should be taxed in South Africa and when that taxing should start happening. So non-residents are normally taxed on the income that they are earning in South Africa, or that's from a South African source. But the physical presence test might determine that they need to become South African taxpayers, or rather that they must pay tax in South Africa on a worldwide income. So the first point is the 6-year test. That's why it's called the physical presence test. It's really a day counting about how much time are you spending inside South Africa. So I call it the 6-year test, and the way it works is in the current tax year, you have to spend more than 91 days inside South Africa. And then for the past 5 tax years prior to this current tax year, also in each of those years, you have to do 91 days in South Africa. And also of those 5 years, past 5 tax years, the total days inside South Africa must be more than 915 days. And that works out roughly a rough average of 183 days, more than 183 days in each of those 5 years. And if all of these apply to you as a non-resident, as somebody not from South Africa spending time here and working here, then in terms of a South African Income Tax Act, you are considered resident in South Africa for tax purposes. And what that actually means is you are taxed in South Africa on your worldwide income. Now, what does that mean, worldwide income? It means that you must pay tax in South Africa on rental income that you're earning from, if you have a property in France, for example, or let's say you're from the US, and in the US you have an interest-bearing account, and now you have to pay tax on that in South Africa. Now, obviously, double taxation agreements may apply. So if you pay tax in that country, some of that tax can be reducing your tax that you have to pay in South Africa. But so that is it. You literally have to count how many days are you spending in South Africa over a 6-year period, current tax year and the past 5 tax years, and total must be more than 915 days. And each of those years, for 6 years, each year more than 91 days in South Africa. And normally a person's passport is used to calculate or count the days. Now, the scary thing is you actually don't want to be taxed on your worldwide income, especially as a non-resident. Point number 2 is if you are now a resident in SA for tax purposes, you're a non-resident, but because you've now passed or failed, I don't know which one is more accurate, if you failed the physical presence test and you end up qualifying to be a South African taxpayer, or to be the distinction between those wordings are very difficult. In order to break the physical presence test that makes you resident in South Africa for tax purposes, you have to be outside South Africa for more than 330 days. And very important, those 330 days must be sorry. Those days outside of South Africa must be 330 days or more, and it must be, number 1, continuous, and number 2, full days, 24-hour days. These days, they don't say it must be continuous or full. It just means that you have to be outside. So these 91 days does not have to be continuous, But this 330 days must be continuous. And this is the way that you would break the physical presence test in order to be considered a non-resident again. And this makes it really difficult. You don't want to be caught in the physical presence test unless that is the way you've set yourself up. One thing, I need to get some coffee. Point number 3, how to actually pass the physical presence test. And number 1, count your days, especially in year 5 and year 6. Now, the reason why I said year 5 is at year 5, if you see in your 5th year of your day, in your 5th year of spending time in South Africa, if you are getting close to this 915 days, it might be a good idea to then or go outside of South Africa in order not to cross this mark. And because if you do, then you could be considered because if you do, then you might fail the physical presence test, and then you are taxed on worldwide income. So that's the first one, year 5. And year 6, really, if you actually, in the past 5 years, you've done this one, you are also more than 915 days inside South Africa for the past 5 tax years. Then in the current tax year, if you are already at 60 days inside South Africa, then you have to make a plan in order not to go past the cycle of 91 days, because then in order to break that type of resident in SA for tax purposes, then you have to leave South Africa for 330 days in order for this no longer to apply. So that's number 1, count your days. Literally, I know some clients, they will actually do an Excel spreadsheet and physically mark on the days, the entry day and the departure day, and that's how they would track their days inside South Africa. And number 2, this is really important. If you can get your DTA to deem you not a resident, not a South African resident, then that is also a way that the physical presence test doesn't even apply to you. So if you have an agreement, if a DTA, a double taxation agreement, say for example with the US, you are deemed a resident of the US, a tax resident of the US according to the DTA double taxation agreement, then you don't do the physical presence test. And South Africa has about DTA agreements with 81 countries, and it's quite a and those 81 is the majority of the countries that people go to or immigrate to or work in. That really wraps up the expat tax series. I hope you have thoroughly enjoyed this. If you have any questions, please let me know. I try to answer all the comments that I get, and we are almost at 1,000 subscribers. Thank you so much. I never thought people would actually find interest or actually like learning about tax, but here we are, and thank you for watching, and I'll see you in the next episode. Cheers.